Yo, massive one. It's your boy Rebel Side Effects at it again with the next one phone. You see it? So I'm here again, just passing information on. You see, when I stress, not when I stress nobody. We just take our time and I share the information. So it's all up to you if it is that you want to learn, watch, learn, and apply the information that's being shared here. You see it? So if it is that you want to, I have no problem sharing this information. But guys, just keep in mind, right? You have to motivate me to constantly be sharing information and helping you guys, because at the end of the day, each one helps all. At the end of the day, it's each one helps all. And all I'm asking you to do is to share, click the like button, right? And subscribe. It's that simple, right? Nothing, it's no money, no cash, no courses, not selling any products. Like, you guys just go ahead and give me that. And believe me, I'll constantly be posting videos to help you guys, right? So that you can constantly be growing and learning on your journey. Now, today, we're here to speak about something that it's very simple, it's very beginner, right, when it comes to trading. But a lot of people don't really take the time out to see how important it is and to basically understand it, right? Because I know a lot of persons who trade and they don't use any elaborate strategies. The only thing they use is the concept that I'm about to speak on. So this concept, it's called break of structure, right? So a break of structure slash change of character, right? So this is the thing that we need to understand in the market. Markets can continue in one direction forever. If the market is selling, it can't sell forever. If the market is buying, it can't buy forever, right? If the market is consolidating, it can't consolidate forever. It has to eventually break out and change, right? It has to. Because if it is that the market was going in one direction forever, everyone would be making money. No one would be losing. The market is just continuing and you're just jumping in on the market and you're winning, right? You're using some big lot sizes to make some big bucks, and the bankers would be losing. So they have to bring the market back at times so that they can throw people off their game and they can close out those stops and take the liquidity that's resting at those stops, right? Okay, cool. Now let's go ahead and just ask, do you know what a change of character is? Are you guys aware what a change of character is? Ask yourself that. For those persons who think that they're big traders, they've been trading for years, but yet they're still not profitable, do you know what a change of character is? Do you know how to see a change of character? How to look out for a change of character? How to utilize a change of character? Do you? That's a solid question. Well, as you can see, I have the 25 1S chart here for the synthetic indices pair. I've always been talking about this pair, well, not pair, but about these synthetic instruments given by Deriv, right? Deriv is getting free promotion from me, by the way. You know, they should reach out to me and pay me. But yeah, I've always been talking about it because this is mostly what I trade. I do trade Forex, but this is mostly what I trade. So I'm going to use these pairs basically to pinpoint and get my point across. So let's take a look at this, right? And let's explain something along the way. So as I was stating, prices, when prices are trending, I should say, right? When prices are trending, they move in one direction. But then they have to change direction to cover those movements, right? Now, when it is that they change direction, what normally happens when they actually reverse? So, not just a retracement, but an actual reversal. What normally happens? How can you tell a reversal separate from a retracement, right? Because for some people, it's very hard. Like, the market may be moving and then it may reverse or it may retrace, I should say. The market may be moving, the market may be moving and then it may retrace. And a lot of persons jump in thinking that that retracement is actually a reversal in the market when it's not. It's a simple retracement back to a supply zone, an order block, or maybe a fair value gap, covering some impulsive move that was made in the market. So, how do you tell the difference? So, any answers? So, this is how you would do it, right? You'd look for a break of structure or a change of character. It's literally the same thing. Where it is you see a break of structure slash change of character, that's where it is you'll see a change in market structure. No, the markets are not perfect. Once it is you get a change in market structure, it could be a small change and then it basically reverses. You can't dictate that, but that's the best way to find out when the market is ready to actually shift. Look at the chart in front of us. So right here, as I said, we have the 25 1S chart, right? We're currently on the 5-minute time frame. Just to go to the lowest time frame, give you guys a bit more context, but this can be done on any time frame. It's a basic structure throughout trading. So let's take a look here at this pair. So right here at this segment of the pair, we can see price moved up, right? So price moved all the way up. Then price decided that it wanted to change. We weren't sure if it was a reversal or not at first. All we know, price came here, formed an order block slash consolidation zone slash supply zone. So what could have happened? Let's look at the possibility of what could have happened, right? Price could have come here, tapped into this order block right here, this small order block, and then it could have just retraced and just went all the way up. That's a possibility of what could have happened, right? But that's not what happened. Price actually came, as we can see here, it came, retraced, dropped, right? Minor retracements inside, but it dropped. Now, what would have indicated to us that price wanted to drop as opposed to retrace and go further? What told us that price wanted to go down here as opposed to up here, right? The change of character. It's that simple. Now, if it is that you, let me zoom in just a bit. If it is that you look right here, so if it is that you look right here, you see price came down, right? Price made a small retracement, very small retracement, but it came down. So this retracement right here, it didn't pass this zone, it didn't go back to break this zone, right? It came here, and this would have been a change of character, right? And then coming back, you have a break of structure, and then it went down. You have a break of structure right here. So this small order block was a down move in the market. It came, it broke that move, it came back up, right? Tap back into this fair value gap area right here, and then it went down, right? You saw the displacement, you saw price pushing down. Now, some persons wouldn't have traded this area, right? The main reason that order block or this order block would have been a bit too unsure for them. You have persons who prefer to be very, very sure, very precise, so they'll just sit and wait for the ideal move, right? Because this is a small order block. The price could have literally just come here and just shut up, right? It didn't necessarily have to come tap into these zones and then actually fall. So let's go ahead and see if we can find something else on the market, or in the market, I should say. So let's look at right here. As small as this would be a nice scalping move, but let's take a quick look at this area right here, right? So overall, price is in a downtrend. Overall, price is in a downtrend, right? We aren't going to go around that. But let's ignore here. Let's ignore this for a moment and focus on this leg, coming into this leg. So that's what we're going to focus on, right? So we're focusing on this impulsive move right here. And why not? Let's go to the lower time frame. Why not? Right, so that we can get a clearer view. Now, keep in mind, I'm not advocating for anyone to basically trade the lower time frames. I'm just here teaching I'm not advocating for anyone to trade lower time frames. I'm just here teaching a concept and trying to help you to understand how the market moves, right? So keep in mind that these concepts can be used literally on any time frames, right? Whether the higher time frames, mid time frames, lower time frames, it doesn't matter. It's just a matter of practicing these to the T so that you can actually get these concepts, right? Now, right here, price comes in, it moves from this upward direction, and it comes and it forms an order block right here, forms a supply zone, and then it breaks down, right? Breaks down. As far as we're aware, we're not sure what price is going to do. Price could have easily come down to this area. Price could have easily come down to this area, right? Right here, and it could have shot up. So this could have been the move that price actually made. Let's take a quick look at this. This could have been the move that price actually made. Come down, come up, top up, and then it actually just continue all the way up as opposed to coming down the way it did, right? So price could have done this. Tap in. So price could have easily done that, right? So it could have easily tapped in and then continued the move up. But that's not what it did, right? That's not what it did. What did price actually do? Price came down, came up, it retraced, and then it actually pulled back, right, into this impulsive move, tapping out all of these impulsive moves. Once it did that, then it started to fall. Now, what would this have been? This could have been considered as a change of character, right? Because price move from this selling or price move from this buying position, right, continued up, tapped into this demand zone, pushed up, but then price impulsively pushed down, it came back, it respected this area, right, respected that area, and then it came down. So this within itself would have been considered a change of character. It came back and then it pushed down again. So the whole concept of the change of character is to basically show where the market is basically changing direction so that you can know or have an idea at least where it is you can enter the market. So that's the whole purpose of the change of character slash break of structure at the end of the day, right? So you can definitely keep that in mind. Let's take a look and see if we can find it somewhere else on the market, or let's go maybe a bit further and actually see what's going on here. So let's look at this, right? So right here, we have a very impulsive move down, like extremely impulsive move down. And what happened right here? Let me just mark out this order block slash demand zone. So this is the demand zone right here. What happened? Let's take a look at this. Price came down, right? Price came up, retest this area, this demand zone, and then price broke. So price broke above this area, and then price retest this area. After it retest this area, what happened? It pushed impulsively upwards, right? So this area would have been a change of character, right? Because it broke structure to the upside. So it broke structure to the upside, right? So it broke this small area down here and came to the upside, and then it retest this zone, retest this area, and use this as liquidity to actually go up. That's a change of character because it's originally coming from a selling motion, right, to a consolidation, and then it makes a higher high, higher low, and then pushes up to continue movement, right? So that's the easiest way how someone can check the market, watch the market, and anticipate how it is that price is actually unfolding, whether price is in an uptrend, whether price is in a downtrend, and when price is possibly ready to change to an opposing trend, an opposing structure, right? That's the easiest way how it is that we can actually um, figure this information out or pinpoint this information. Now, just keep in mind prices aren't written in stone. It does prices aren't written in stone. They don't go perfect every time. Price action can do whatever it wants, right? It follows certain patterns, but you don't know when it is that it will choose to follow those patterns. The best option is to sit and wait and intently analyze intently, right? And wait for your formation to play out as opposed to trying to predict it. We don't predict markets here. Anyone who says that they can predict the market, right, they're losing money in the market. We don't predict the market, we trade what the market provides us. So we look for our specific confirmations, look for our specific confluences. When we see those, we take those trades, right? When we see those, if we lose, we're okay with that because we followed our strategy, we followed our concept, so we don't care if we lose or not. At the end of the day, it's about perfecting the technique, not necessarily about just making money. Because the more you perfect your technique, it's the more money will come. So, okay, let's take a quick look at the step index, right? To see a change of character in the step index. Simply looking at the 1 minute time frame, same way, right? So, the same thing. Now, right here, we see price making this impulsive move up, right? But then abruptly, it breaks down. Now, right here, we'd see where it makes a low that took out this low, right? So, this would have been the most recent low. Let me go ahead and just point. So this would have been the most recent low, but then this low would have taken it out, and then price would have retraced back to this zone, right? Now let's clear the chart and take a look at this. So based on what it's showing here, price made this impulsive move up, right? So it's showing willingness to go up. As we can see right here, as we can see right here, price came up, it touched back into that demand zone, it came back up, and it touched back into that demand zone, internal liquidity, but then it pushed all the way down, came back and pushed down, right? Now, what happened here? This would have been the last push, the last demand zone that was formed. And what did we see here? So this was the last demand zone that was formed before price basically changed character. How did we know that price changed character, or how do we know that price changed character? Price broke this zone. So as we can see right here, price broke this zone, right? So it broke the previous low to give us this new low, and then it came back to retest the zone and respected this high. Now let me just clear the screen so that it doesn't get too hard to follow. So as we see, it came down here. This would have been the most recent low before the break of structure and before the change of character. Keep in mind, price could have easily come here, respected this zone, and then continued up because this is a demand zone, right? So it could have tapped into that demand zone and easily go up, as we're seeing here that it's already in an upward motion. So it could have easily followed that trajectory, but it didn't. Instead, price came up, it dropped, broke the zone, came back, and then it went down. We're seeing it here, and there's a possibility it may go down. We'd have to wait and see. But basically, this is the overall concept of a change of character. So as we can see, right here would have been a lower high, right? This would have been the higher high. So this would have been the higher high. Yeah. So right here would have been a higher high from here to here, right? So from here to here would have been a higher high, but then that higher high was taken out. And how do we know when something or when the market is in an uptrend? How do we note when the market is in an uptrend? It's from higher highs and higher lows. How do we know when the market is in a downtrend? It's from lower highs and lower lows. So if it is that the market breaks structure to the downside coming from an uptrend, that simply means that the market seems as if it wants to change character basically. Right? So from right here coming up and then retesting this zone, coming down, breaking this area right here, right, and forming this lower high. So instead of this lower and forming this lower low, so instead of forming a higher low from right here, forming a higher low and continuing, this would have been the higher low, not breaking this point. Instead, what did the market do? Instead, the market decided that it would have broken this area. So it broke this low, and then this would have been the new low, which is a lower low. So once it broke this area and formed a lower low, the aim would have been to watch to see how it reacts to this high, which it came up to this zone and then it fell, right? And that's how you use and that's how you actually use the breakup structure or the change of character. And it's more effective on the higher time frame because the lower time frames, especially the 1 minute, has a lot of noise. So it's easier to connect with this on the higher time frames. So on the 1 hour, the 4 hour, 15 minute, 30 minute, so on. You can still use it on the 1 minute, 5 minute, but in order to get the most out of it, it's easier to use this on the higher time frames, right? Because normally when market changes character, it comes back to an order block or to fill a fair value gap or comes back to the supply slash demand zone. And then it would basically start consolidating from there or form a new order block in that retracement zone. And then it would fall or it would rise. So we're here on the step index on the 30-minute time frame, right? So we want to take a look at the change of character slash breakup structure on a higher time frame so that we can get more context to it and see how it works on different time frames. So let's go ahead and take a look right here. So right here, right, it's very clear, very clear to see that price is in an uptrend, right? Yeah, there's no questions about that. Price is definitely in an uptrend. As we can see right here, price is making higher highs, higher lows, higher highs, higher lows. But then something happens right here. Price comes down and breaks the previous low and retraces back to the order block slash supply zone, and then it falls, right? We can evidently see that. Let me just clear the markings so you guys can look. So we see that. So right here, price comes up, taps into this demand zone, comes up, taps in, internal liquidity, takes that out, taps in, taps in, taps in, right? Now right here, it breaks structure, it breaks this area, So price breaks this area and comes right here. So after breaking this area, it retests this zone, tapping into this zone, but it doesn't break this zone, which shows a willingness. So keep this in mind. The mere fact that price breaks down, the mere fact that price breaks down and breaks below, right, below the previous zone in an uptrend. So let's keep this in mind. Price is moving in an uptrend. The mere fact that price breaks below the previous low that was formed means that it broke structure, right? So that means there's a willingness for price to move in a downward projection. But it can still go up and continue in the upward projection. So what we need to do is to wait and see how it responds to the previous high that was formed. So we see where it breaks down right here and it comes up, it taps into this zone, but then we start see breaking down, then we would say, okay, yes, so that's definitely a change of character, and then we could look for an entry right here, right? And that's how it is that we would have an idea to say, okay, price seems as if it wants to go down, and we could try to get this entry. Like, it's that simple, right? And this is it on a higher time frame so that you guys can basically see how it works, see the structure, see how everything is set up basically, right? So it's nothing difficult, it's just a matter of understanding so that you can implement it yourself and look out for these things, and you won't get these things in just one go, right? It takes practice, it takes time, right? It all depends on you, how much you're willing to invest, how much time you're willing to invest, how it is you're willing to grow, right? And learn along the way. You can't expect to just get up tomorrow and just learn it in one go. That's not how it works. You have to invest time, you have to invest energy, right? Your time is currency, your time is money. If it is that you invest your time in this, then you'll see the fruits of your labor. So just know it's all up to you at the end of the day, right? What it is you want from this trading journey, how much time and energy you're investing in this trading journey. That's what will lead you on your way and tell you, show you, I should say, your path to success so that you can know what's possible and know where your future lies. And let me just say this very quickly. Not everyone who wants to trade, right, is fit for trading. You have some persons who just don't have the discipline. They can't sit and wait for hours and watch the market. They can't wait for their systems to play out. They constantly feel as if they have to take a trade even when there are no trades there, right? So you have to learn and look deep within yourself. Is this something that you see yourself doing long term? Is this a skill that fits your personality and your character? Right? So you have to analyze yourself and your values and see if this is something that's meant for you. But yeah, guys, so hopefully this helps you, right? Hopefully you're learning from all of my videos. You can always leave your comments, I'll always respond, right? Positive comments only, right? Everyone else will be blocked. Anyone coming with negativity will be blocked because we're here to learn and we're here to help each other. I don't know everything, but I'm definitely teaching you based on the information I've learned and what has worked for me. And you can also teach me. We're here to learn. Anyway, guys, take care. Riverside FX out.